Are you concerned about the current state of the economy and what it might mean for your future investments? If so, you're not alone. Many people are worried about how to invest in a recession. However, don't worry, plenty of opportunities are still available. Hello everyone, welcome to Finance Wisdom Channel. This video will talk about simple techniques for investing in recession 2022. So keep watching. If you're new to this channel, do like and subscribe to the channel. So without further ado, let's get started. The first simple technique for investing in recession 2022 is to review your investment portfolio and make changes needed. During a recession, reviewing your investment portfolio and making changes as needed is essential. Many investors choose to sell off stocks that are performing poorly and invest in more conservative investments, such as bonds. Others may choose to invest in companies that are doing well despite the recession. There are a couple of different techniques that can be used when investing in a recession. One is known as dollar cost averaging, which involves regularly investing a fixed amount of money into an investment. This technique can help to smooth out the effects of market volatility. Another technique is known as value investing, which involves buying stocks that are undervalued by the market. This can be an excellent way to find bargains during a recession. No matter what technique you use, it's crucial to stay disciplined and stick to your investment plan. Reviewing your portfolio regularly and making adjustments as needed will help you weather the storm during a recession and come ahead in the long run. Second, consider investing in assets likely to hold their value during a recession, such as gold or government bonds. As the saying goes, a recession is when your neighbor loses their job, a depression is when you lose your job. While the economy has shown some improvement, experts warn that another recession could happen as early as 2022. And with nearly 10 million Americans still out of work due to the economic crisis, it's clear that we're not out of the woods yet. So what can investors do to protect themselves? One option is to invest in assets likely to hold their value during a recession. Gold, for example, tends to do well when the economy is struggling. Other haven assets include government bonds and cash. Another strategy is focusing on companies essential to consumers, such as healthcare or food. These companies tend to weather economic downturns better than others. Of course, no one can predict the future, and there are no investment guarantees. But by diversifying your portfolio and being mindful of economic indicators, you can get better weather any storm that may come your way. Third, invest in low-risk, high-yield investments like government bonds or CDs. Many believe the best time to invest is during a recession when stock prices are low. However, there are several things to consider before investing during a recession. For example, it is essential to choose relatively low-risk investments, such as government bonds or CDs. While risk is involved in any investment, these options are generally considered more stable than stocks. In addition, it is essential to reinvest any profits into the investment to compound the returns. Fourth, stay away from risky investments like penny stocks or cryptocurrency. This can be tempting because they have the potential to make a lot of money if things go well, but they are also very risky. If the recession lasts longer than expected or worsens, you could lose a lot of money. Instead, focus on more stable investments like bonds and blue-chip stocks. These may not make you rich overnight, but they're much less likely to lose value if the economy takes a turn. And if the recession turns out to be shorter than expected, you'll still be in an excellent position to make money. So if you're considering investing during the next recession, remember to avoid risky investments and focus on more stable options. This will help you protect your capital and ensure you come ahead in the long run. Don't forget to like and subscribe to the channel if you like this video. The fifth technique for investing in recession 2022 is diversifying your investment portfolio across different asset classes. This means investing in a mix of stocks, bonds, and cash. By diversifying your portfolio, you'll be able to weather the ups and downs of the market and protect your investment returns. Sixth, consider real estate. While the housing market was one of the hardest hit sectors during the last recession, it also proved to be one of the quickest to rebound. Many experts believe that the housing market has already bottomed out and begun to recover. Real estate presents an excellent opportunity for long-term growth for investors who can stomach some short-term volatility. In addition, with interest rates expected to remain low, now is a great time to consider investing in property. So whether you're looking to buy a rental property or invest in a REIT, don't overlook real estate as a potential investment in your post-recession portfolio. Seventh, look for companies with solid balance sheets. This means they have plenty of cash to weather a downturn and take advantage of opportunities during economic turmoil. In addition, companies with strong balance sheets can often maintain or even increase dividends during recessions, providing investors with a valuable source of income. Of course, no single indicator is perfect, so it's essential to consider various factors when making investment decisions. However, focusing on companies with solid balance sheets is a good start when preparing for a recession. Another technique for investing in recession 2022 is considering using a professional investment advisor to help you make the most of your money. A good advisor will have extensive experience navigating economic downturns and can offer valuable guidance on protecting and growing your portfolio. In addition, an advisor can help you to identify opportunities that may arise during a recession and develop strategies for exploiting them. While there is no guarantee following these steps will lead to success, they can significantly improve your chances of weathering the storm and coming ahead when the economy eventually recovers. Finally, keep an eye on global economic indicators to see when the next recession might occur. One way to understand when the next recession might occur is to keep an eye on global economic indicators. For example, households and businesses' debt is often seen as a leading indicator of economic activity. When debt levels starts to rise, it can signal that consumers and companies are becoming less confident and are starting to cut back on spending. Another leading indicator is the level of corporate profits. When profits start to decline, it can be a sign that companies are starting to experience difficulties and may begin to lay off workers. By tracking these and other indicators, you can better understand when the next recession might occur and make decisions accordingly. It is important to remember that no one can predict when the next recession will hit, so it is essential always to be prepared. Following the simple techniques outlined in this video can help ensure your portfolio is as recession-proof as possible. Have any questions about these tips or want more information? Let us know in the comments below. Thank you for watching. I hope you have learned something from this video. If you like this video, give us a like and subscribe to the channel. Thank you and goodbye.